Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, switching to my radio voice. And today I have, and you did laugh at it, good. It's not every time that they laugh at my joke. Today I have with me Nick Cavanaugh, climate scientist and founder of Sensible. Nick, thanks for joining me today. How's it going?
Going really good. How are you?
Fantastic. And we were talking just before we started recording that you are in LA, but
I am.
dealing with
Venice Beach.
LA-like weather.
Unseasonably cold and rainy weather. Cold right now, rainy starting tomorrow. I suppose that's the rain in particular is good for Southern California in general, and it's great for Sierra snowpack.
It's true. So Venice Beach. So what I remember of Venice Beach is the gyms right on the beach, and every like 50 feet little doctor's offices selling pot cards, basically. And
not anymore. Not anymore.
I was going to say it's now legal for recreational in California, right? So you no longer need the so all those little offices are gone, I'm guessing.
Yeah, we have a store called MedMen, which, if you can think of if an Apple store sold weed, that's basically what it would be. It's all very high end, very posh now.
Okay, interesting, very interesting. So Nick, we always give the guest the chance to give the elevator pitch. What is Sensible?
So Sensible, broadly speaking, is a parametric insurance platform. So we built all of our own weather and climate tech, our own parametric policy management system, the financial backbone. We have a warranty company, a nationally licensed MGA, captive in Bermuda. So essentially, we're more or less by piecemeal a full stack insurer, doing all of the bits, all of the data, all of the underwriting, policy management, all of that. And we provide a product called a weather guarantee, which is a warranty product, to consumers that are doing things outside within the travel and outdoor events industries. Essentially, the crux of the product is when it rains and that ruins your day, we pay you back. It's a very, very simple premise, incredibly difficult to do on the back end, but that's part of the fun.
Okay. And kind of the easiest one, without even looking at the website yet, kind of the easiest one that comes to mind is weddings.
Mm-hmm.
Right. So I'm assuming that was one of the first markets that.
So it wasn't, but there's a reason.
Okay.
So weddings, yes. So weddings, roughly $50 billion market globally. Big chunk of that is outside. Of course, we could insure that as an event where it rains on your wedding. The issue with that is if it rains during your wedding and we pay you back, does that make you happy as a bride and groom? Probably not. Moreover, if we get that payout wrong, basis risk, something goes wrong with the product, as an early stage startup, we get absolutely destroyed on the interwebs by angry bridezillas. So perhaps down the line, that's a product we do, but certainly not where we wanted to start.
Okay, so what was the bread and butter? How did you launch this thing?
So I am a climate risk nerd. I started my career as an academic, did a master's, PhD, postdoc in space, looking at how climate change impacts weather probabilities and how we predict these things. Big part of my research was sponsored by the US government, Department of Energy and Department of Defense. They were particularly concerned about extremes. So windstorms, hurricanes, floods, fires, that kind of stuff. But really, how when you think of weather, there's a probability distribution of stuff that can happen. How does climate change that distribution? That's really what I studied, and intrinsic in those distributions is risk. A lot of physical risk, sea level rise, storm damage, etc. So my whole career, even before this iteration, was thinking about risk from a probabilistic standpoint. The second part of my career, I actually went into hedge funds and I was trading energy and ags futures, which, when you really think about it, trading a future price of some commodity, it's really you're making a bet on a risk profile. And ultimately, the way that I think about insurance and sort of this third installment, or let's say insurance risk transfer generally, really what it is, it's all about probability. And you can call this your risk transfer contract, insurance, a warranty, a derivative, a guarantee, a futures contract. There's lots of different ways to slice and dice it. We ended up launching a warranty product because that fit the market that we were going into. But that's kind of how I think about risk. And then how I got started in this space in particular, given that sort of my background is in weather and climate data and infrastructure, and then financial markets surrounding that. So those are sort of my two pillars of my three passions. The third one is I'm pretty avid outdoorsman. So really like skiing in particular. And so, this is a product, weather guarantee intersects with the ski market. You take a trip to Jackson Hole and you expect great powder. What if you don't get it? Can we pay you back? That was really the original premise. But our bread and butter now is theme parks and camping, which is, you book a day at a theme park, or you book a campground and you want to go camping next weekend. What happens if it rains? That really ruins the entire experience. So that's sort of where the business has gone, and we're moving into more traditional travel sectors in 2023 and 2024.
I love that this came from the combination of your education and like absolute nerdiness. The way that I'm nerdy about insurance, you're nerdy about climate risk and about its day-to-day effects, basically in our world today as an outdoorsman. I love where it came from. However, given how many insurtechs I've interviewed in the past and how many venture VCs I've chatted with at conferences, it seems that the TAM for like the total addressable market for skiing, theme parks, camping, vacations ruined is just not that large.
You'd be surprised. So broadly speaking, larger market participants in these spaces view this as a second form of travel insurance, or travel and event cancellation insurance, ticket insurance. Those markets together between 20 and 30 billion. We attach at incredibly high rates, much higher than travel or ticket insurance, generally between 30 and 50% at point of sale, and also at a higher price point. So when you think about the travel market globally is about 1.8 trillion in spend. Maybe 50% of that is outside. So that's 900 billion of insurable interest. And then you back out some of these attach rates and price points to the product. It's actually quite large. Moreover, we're providing a coverage that traditional travel insurance doesn't cover. And so we tend not to cannibalize travel insurance uptake either. So it's really, while comparable in size, and you can arguably it's travel insurance is an analogous product, we are quite different in a number of ways, but generally consumers think about a thing that you buy at point of sale to protect your trip. Travel insurance is kind of the simplest mental model for that. Very similar, but actually, those markets are huge, massive money makers for insurance companies.
Okay, so a combination of the market is big enough. Number one, number two, if you're selling travel insurance, it's a good addition to it that doesn't cannibalize your. So basically, your distribution partners are more than happy to add your product to theirs, because it doesn't get it doesn't negatively affect their sale, and so it's distributed both directly to consumers and through partners like travel insurance companies.
So not distributed through travel insurance companies, but we could be. So we're generally distributed directly, through travel distribution channels. So when you book something online, you get the optional add-on. We also do some sales post-purchase. So after you've booked your trip, you get an email from us saying, would you like to protect it? And then increasingly, we're looking at bundling the guarantee product, the warranty product with a particular purchase. So think, you get a premium room rate at a hotel, and it comes with a weather coverage.
Okay. Okay. So what's next for you guys?
So, big three categories that we're looking to tackle in 2023, which are kind of big, are traditional hotels, golf, and credit cards.
Golf,
Um,
that's a really good one. Lots
yeah,
of money in
so
golf, and
lots of
rain
money in
does
golf.
significantly get in the way of your game.
Yeah, and then there's sort of two paths there too, where one, there's destination golf, people booking very expensive trips to go play Pebble Beach. This is effectively another travel policy. It's more or less bread and butter what we do. But there's also sort of the ticketed events category, which is golf tournaments, where you as a spectator would buy tickets to a tournament to go watch. You know, what if it's rainy and miserable? Like, you don't want to be there. So it's really, two categories that both fall under the umbrella of golf. But yeah, it's a big market.
What does the loss ratios look like for this type of product?
So as a parametric product, we can target loss ratios. So by adjusting coverage and payouts, potentially in multiple tiers, we can choose our own loss ratio. We're generally looking at loss ratios between 40 and 60%. So sort of kind of average of what you might expect for a personal lines insurer.
Okay. So one thing that hasn't come up at all is how did you realize that insurance was the right way to apply your climate degree?
Yeah, so that's a really interesting question, and I would push back and say that I haven't picked insurance. I think of risk transfer very broadly. And one category, I mean, insurance really is a regulatory term when you think about it. There's lots of ways to accomplish risk transfer. So that's really, when I think of my business and where we're going, it's risk transfer generally. This first product is a warranty product. That's not to say future products in different categories might be categorized as insurance. They might be derivatives. They might be something else. Um, but underlying all of that is this idea of generally a long-tailed loss distribution. Can you cut off that long tail on behalf of a purchaser, an insured in this case? So that's really how I think about things, and that's that could be micro insurance. It can have capped risk profiles, which we have really short-tailed risk profiles because your trip can only cost so much money. Long-tailed traditional cat risk, hurricanes, wildfires, effectively have infinite losses. Those are attractive to some investors, but a very different product. So down the line, it's really a good question of where do we go? How do we use the platform that we've built for different purposes?
Yeah, now that the platform's built, it probably pretty easy to add new coverages as long as they're weather related.
Yeah, from a tech standpoint, yeah. I mean, definitely the harder part of any business is executing. And with an insurance, specifically for consumers, it's distribution. So as I think about rolling out consumer products beyond this weather guarantee, the weather guarantee was attractive because it was obvious how you would sell it at scale. Online travel, like people book their travel online, and you figure out how to get into those sales channels. Other products, it's all about how do you get it, get the product offering in front of as many people as possible. And in many ways, that really dictates where the opportunities are.
Okay, very interesting. Out of hundreds of conversations with founders, you might be only the second or third one that that came here uh out of a maybe the first out of a combination of academic studies and what I like to do in my personal life, and nobody was covering it, right?
I've said before, and I'm sure I'll say again. I've enjoyed being a founder. This is probably the only company that I've ever found. I've been doing the exact same thing for 15 years, just in various different ways.
Interesting. Okay, so um normally I look at your LinkedIn and kind of like look at where you came from. In your case, you came from the PhD program, but what was or what is Future Proof and Scoot where you worked at prior?
So I advise those companies.
Oh,
They're
okay,
also
okay. Current
they're
advice
also
to.
insurtechs in the climate risk space broadly.
Ah,
Scoot focuses on the ocean, and Future Proof is focused on real estate.
okay,
So
perfect. So so
again,
similar.
like very much the same thing the whole time. It's just depends
Okay,
on how you look at it.
perfect. Do you guys share like were you invested by the same VCs or how did you find each other?
No, I was so after Citadel, which was my last job before founding. I had a year on garden leave, which was basically sitting on my hands, figuring out what I was going to do next. And I became advisors to both of those companies at that time. While I was kind of dabbling in this idea of like, am I gonna start a company? They were both folks that were, you know, one step removed in my broader network. Um, Both really interesting applications that I wasn't considering myself. And so I said, wow, what a great opportunity. You know, I can help doing, you know, help other founders doing something that I think is interesting that I don't personally want to do myself. So I said, you know, great opportunity. I can learn something, and as well as, you know, be helpful to the broader climate community.
Awesome. And I just saw on your LinkedIn that you guys were named one of the 200 best inventions of 2022 by Time.
And that was a
So
fun
that's
one. Yeah.
pretty cool. Pretty cool. How did like was that a surprise? What was that process like?
Yeah, I mean, it's kind of a neat thing. Like after our Series A, which is we closed that in May, we did a good amount of press around that, and that kind of trickled through the summer. And then we got an email from an editor at Time or whoever was in charge of picking that. I think it was in September, basically being like, "You're on the short list for this award. We need some, you know, some digital assets from you." And we said, "Oh, that's really neat." Guess who knew? You know, Time. You know, it's like kind of an iconic American
Yeah, they've
publication.
been around
Um,
forever. Yeah.
yeah, so I think we were all just like, "Wow, that's cool, very cool."
Very cool. Congrats on that. Thank you so much
Thank you.
for joining me today. Very interesting and yeah, it makes so much sense. I'm not an outdoors type of guy, but it definitely I can see
Do,
like it's insurance
do
or
you
warranty or built around
push
our
back
needs.
on that? Do you like hanging by the pool?
I do ski.
Okay.
So that one not often, but that one
Yeah.
is kind of the big one.
Yeah, I mean, we do get. It's funny, like a lot of our employees are very like we call outdoorsy types, skiers, rock climbers, hikers, whatever. We do attract that persona. The mental
Hmm.
model of what we sell caters to those types of like more serious, you know, active outdoors type people. But I strongly suspect that the bigger part of our market and the bigger part of our customers are sort of run of the mill. You want to be doing something when it's nice outside, and it isn't. So you know, it's the largest part of the leisure travel market is people going to the beach, which gets completely ruined if it's raining.
Makes sense. Awesome. Thank you so much for your time today.
Yeah, really appreciate it. Thanks for having me on.